the highest energy show in tech and blockchain. Why so high energy? Because we got two of my favorite people. Yes, two of my favorite people who agreed to join our show today. So the topic is, and this is from Enzo Villani. So, actually, I'll introduce them, then I'll say the topic because he actually came up with it. So I'm going to introduce Enzo Villani. Oh, you know what? I got an echo. Hold on one second here. No, it's okay. The Enzo Villani and Brad Yasar. So Enzo came up with this beautiful title, Fundamental Analysis of Blockchain Project, looking at tokens in a new way. That's a big potential delivery. We're gonna have to follow through on that. Why don't you guys introduce yourselves, say who you are, a little bit about your background and what you're currently working on, and then we'll dive into the topic. And I'm flipping a virtual coin here. Brad, you start.
Thank you, Gordon. Thank you for having me, and Enzo. This is going to be a good conversation. But my name is Brad Yasar, and I am the CEO of Beyond Enterprises. We've been building and supporting projects in the blockchain space since 2016, and continue to do so. I got involved with Bitcoin early on and have always been a passionate advocate for different uses of cryptography, and we keep supporting the ecosystem in any way we can, whether it be investments or building stuff or promoting stuff. That's pretty much it. I'm not working on anything that's not a.
Oh, Brad, you muted, or the audio went off. Brad. I think I don't know if it was just me, but I think I lost the last 10 seconds or something.
I was just saying I'll let Enzo talk because I have a couple projects in stealth, but nothing that that's ready for public scrutiny. So we're just building stuff.
Do you feel scrutinized, my friend? Okay, Enzo, go.
All right. Well, hi there, guys. Thanks for actually having me, Gordon. And Brad, great seeing you. I haven't seen you in a while. So my name's Enzo Villani. I run Alpha Sigma Capital. I basically formulated the company in Q4 of last year as a personal firm, but then I turned it into a fund. The fund idea is quite simple. We invest in blockchain companies, and the blockchain kind of economy is what we call it. And those companies are usually companies that are growing or that already have kind of made it out of their seed stage. We have done some deals recently into seed level, but we'll invest in tokens, into equity. It's called a multi-strat fund, which is basically multi-strategy. We've even done a purchase of a company where we bought the assets out of the firm and we set up a new company. So it's kind of the firm had run out of money and we're relaunching that product. But my background is basically, I'm a fintech person for many years, a Wall Street guy. I'm from New York. I live in LA now. When we started the fund, we started doing a lot of analysis, and my partner, Mike Ungai, is a CFA. Wes Levitt, who's a partner here, is a CFA. Nick Birnbaum, who's heading up the analyst team, had a Series 7, worked for Prudential. I mean, we have like a public equities background. My background is NASDAQ and public equity markets. Mm-hmm. I've done a lot of actually consulting, where I put together companies that advise and consult large to small cap public companies on a global basis, like probably a couple of thousand. And with that background, I was like, we have to look at these companies differently, because some of the companies that we first were investing into, they weren't like hype machines. Their tokens were trading, but they weren't completely really overvalued. And we started looking at comps, and the way most people look at the technicals analysis really for like Bitcoin trading, well, they look at all coins from a technical analysis standpoint, charts, candlesticks, etc. We were like, you know what? We want to do the due diligence anyway. So we started doing that, and then we'd write these internal documents And I was like, you know what this area needs is research coverage, like almost like equity, like public equity research coverage. And the reason why is because tokens create the communities or basically stakeholders, or in some cases like a shareholder. A token to me has some identification. In fact, like the governance piece or voting is similar to a proxy. So there's some, and it's also helpful to educate people who are not from the space. Like when you talk gas fees and this and all this other stuff, people are like, they just glaze over. If we started speaking about these companies maybe in a more in a traditional financial approach, but telling them that this is not, tokens have different value sets and the equity, and it's gone really well from the research standpoint. It's pretty interesting what's going on. So we did
sorry, Enzo, let me pause you
I'll
one
stop
second.
there.
Well, pause there because I want to continue, but I want to throw some stuff at you. I thought the title you came up with for this session was fascinating and provocative, because when I heard the word fundamentalist, I think Warren Buffett, Charles Munger, that whole deep dive-ish, non-fatty way of uncovering enterprise value. I wonder if you meant it that way, or if there was another shade of meaning or gloss to your approach.
No,
okay, and
we look at these. No, that's
so
it.
do you think that and I'll find the original book, I've read it a few times, but do you think that approach maps over one to one, like perfectly to blockchain models, or is there something new or different, or where are the gaps if there's gaps?
So you identify where it does match, and then you have to create additional models. It's similar to what happened with the kind of internet era when the internet stocks came out. They were valued and they were not profitable. People were like, these aren't profitable companies. How are you valuing them? So they had to value them in different ways. We're doing the same thing here.
Got it. And then Brad, just to kind of feed into some of your background, maybe you can tell the group, you had a lot of background with crowdfunding, A+, Kickstarter, even before you got into the token space. What's your mental model for identifying value or opportunity?
I actually started with traditional IPOs and investment banking. So even before Jobs Act became a reality in this country, I've done some public sales, two to be exact, one on New York Stock Exchange and one on NASDAQ, but went through the whole preparation phase, 18 months to 2 years working in an investment banking capacity. So, the cumulative experience that you gain from doing the really traditional stuff like an IPO on, NASDAQ, to doing an ICO in 2017 where there's no location, there's no company, it's just a code that collects funds and then is supposed to use them in a certain way, the DAO model. Things change a lot. As far as how to identify value, I think I'm more of a fundamentals guy than technical analysis, because I find technical analysis mostly retrospective. It works really well if you're doing technical analysis on historic data. When you try to look forward, and I'm speaking from hands-on personal experience because we're working on quant strategies and trading bots right now. So we're trying to take the technical analysis and quantitative analysis models and apply them to future so that we can have profitable trades. There are a lot of challenges. When people look at historic charts and say, oh, you should have caught this. Well, you only say that because the chart is final. The candle has closed, the information is set in stone. So you can go back and say, well, you should have exited there. When it's happening in real time, it's fuzzy. So if you understand the fundamental value in a business, you're a little more shielded from the day-to-day fluctuation of the token, the stock, the currency, whatever. And it gives you a more long-term investment outlook, at least to me. So I like understanding the fundamentals of any project, whether it's blockchain or high tech or just traditional. I mean, if it's a pizza parlor, why should that business succeed? And with fundamental analysis, you can see, okay, it should succeed because of these fundamentals being there, or it shouldn't because it's in the wrong location, there's too much competition, whatever the circumstances are.
So let me take a moment to frame this, because it's kind of an abstract thought, and then I'm going to throw it to both of you. When you have a traditional equity type security, there's at least some long-term correlation between the price of that security and the success or failure of the underlying business. It's not perfectly matched one for one, because because it's not designed to match one for one, but the whole point of equity securities, you're in an ownership type position, and the public market price should eventually correlate. When you get to tokens, even security tokens, unless they're specifically modeled to reflect what a stock would be, I would posit an element of decorrelation or independent movement separate from the underlying entity. And when you get to a utility token, again, I can see Brad's reaction. When you get to a utility token where you really have something that's functional and you don't have a claim on the underlying earnings or assets of the company that came up with it, does fundamental analysis of securities even apply then, or do you need new metrics and models for evaluating that token separate from the underlying entity? And I'll just, if that was clear, I'll throw it to both of you to just respond to or think about it.
So I'm gonna disagree at least a portion of the statement, because I don't think the only reason why the value of your digital asset or your stock would be uncorrelated to the value created by the business is by design. That's why doing good tokenomics work before you launch a business using tokens is key. If you don't do that, you may end up with a business that's very successful but doesn't capture anything in its token. Ripple is a great example of it. If Ripple's digital currency captured even a small fraction of the value creation the underlying business and its big partners have accomplished, it would be, a very different price point right now and market cap. But it doesn't, and it's designed not to be correlated. So I don't think just because it's a digital security or a stock, it's uncorrelated, or it gets more uncorrelated just because it's digitized or it's a utility token. I think people don't.
Just to be super clear, I'm not saying that digitization or tokenization decorrelates. I'm saying that the concept of equity is kind of specific, and stocks kind of map over to that concept of equity. You can have a security that has equity. You can have a tokenized security that has equity-like characteristics, but because these new ways that you combine these chimeras, it's not quite as correlated as a traditional stock might be. Not that it's decorrelated.
But it can be. It depends on your tokenomics. That's what I'm trying to say. You can have the same correlation, same amount of correlation with a utility token that you would have with paper stocks in a business if you design it that way. But if
wouldn't
that
then be a security? If a utility token. I'll just jump. So there's two things. There's two things. One is stocks don't trade at the value that they're supposed to. They never do. Small cap stocks, micro cap stocks they're not really liquid. Because they sometimes trade under book value. Literally, the cash in the balance sheet stock is less than that. And then you have stocks like Tesla, who trade 400 times their EBIT. Okay, so at the end of the day,
dude, it's Tesla.
Very irrational. Well, the markets are irrational in general. The markets are irrational, and we know this. And what we point out, what we're pointing out is like he talked about Ripple. Brad actually mentions Ripple. So there's a company called Quant, run by the former head of cybersecurity for the Bank of England. He has the Federal Reserve is one of his clients. He has a partnership with a company called CNET, which has 1,500 of the European banks from all over the world, but mostly in Europe. His operating system is basically like a smart order router. Basically, it's more like a router, like a Cisco router, where it routes it lays on top of blockchains, private, public, any blockchain, and it's interoperable. CNET is his partner, MIT is his partner. That company, their token is trading at $300 million market cap versus Ripple at 9 billion. They have probably the same amount of customers or same amount of partners in their network. They have the Rockefeller Foundation, they have the vice chairman of Comcast on their board. So it's obviously not because his token is not trading. There's a couple of reasons too. It's all about the kind of liquidity. You have to look at multiple factors, the liquidity and the fact that the exchanges are not really regulated. You have to look at a lot of different factors, but the fact is that the token represents 2 or 3 things that an equity represents. It represents potentially a voting mechanism, either voting or governance token, which can also be basically not hacked, but can be taken over. If you've seen just the recent issue with Uniswap and the Yasar group at the Yasar group kind of Lambda, they're trying to position a less of a quorum in order to basically take over Uniswap at some level. That's like a hostile takeover. My background is in proxy work and all that type of work. I see a lot of correlation there. And then voting with your feet. If I don't like, there's a check and a balance. If your community, he's right. If Brad's right, if the token economics are structured properly, the community and everyone should see value in that token, even in the utility as well as in the trading type of community. And if you don't like what's going on, you leave. You vote with your feet. You sell those tokens. And we've seen that happen also to many companies. And it's all, and then the third factor is the continuous public information that these companies have to pump out in order to allow the community to understand what's going on, which is similar to investor relations, another part of the business that I've been in. So you have so many correlations, and if you step away from the book value and the real finance, I mean, we have CFAs here. They're not saying to me, "Oh, well, it's not trading. There's no book value." No, we have to look at it differently.
Actually, let me pause
part of
for a
their
second.
balance sheet.
When you said CFAs, that actually really caught my ear. I mean, just for this is an international crowd. It's a chartered financial analyst,
yeah.
I think.
This is,
and so
that's hard it is to become a CFA.
Yeah,
I'm
extremely.
not a CFA.
No, but you had them working with you at least, maybe in some ways for you. So maybe you're the guy who dropped out of elementary school and now has 20 Harvard MBAs. Who knows? And I'm not slamming them. Okay, everyone, for every hand there's a glove. But the fact that they are looking, we are doing different models. We were just talking about a model yesterday to look at Voyager versus some of the competition or the comps. It's really interesting what's happening. I mean, but Brad's right. If you start off with us, the token economics should represent the way the company, like the idea is the token will always go up in value over time if the use case is being used, is being executed. So all right, let me pause on that one. Yes, it's the utility token's value increases with its utility, or should. I guess I'm coming out there that the utility of the token bears some relationship to the success economically of the underlying company, if there is a company, but it's a little bit more attenuated than, say, a stock. I agree stocks are irrational, but there's always this, I also hear the sentiment that in the long run, the truth comes out.
But that's why you're looking at it as a different way. So let's say you have a token like Quant. So the Quant gets, and Ripple has a challenge with this too. Getting the banks to use the token as part of the process is very difficult, right? Sure. They're gonna, right? But if they do get them to use it, and you have 500 banks using a Quant token or a Ripple token, that's pretty huge. And that's actually more important than that you can own that thing than the equity in some ways. Could be more valuable than the equity.
Oh, don't get me wrong. I'm not saying one is better than the other. I'm just saying that I guess I'm indirectly supporting your point through the title, which is you need new models to evaluate these things because they're structurally exotic or different from what we used to have 20 years ago.
Right.
Well,
It's
absolutely.
a new
You
way
have,
to look at it.
you have multiple stakeholders now, Gordon. You know, in a traditional company, you have obviously the owners, operators, executives, that's one group, and employees, the contributors to the business. And then you have investors. And those are your two, and then you have clients. But again, in a capitalistic system, you know, the two former groups take the bulk of the value out of it. So you have just your investors, and assuming that everyone who's working for the business is also a shareholder to a certain extent, you only have one group you need to appease. So it's pretty straightforward. If your stock price is going up, everyone's happy. Now with a tokenized model, you can have an actual business with equity ownership, and then you have your token stakeholders. And now you need to capture value on both buckets to be fair and you know, create value for everyone involved. And that I think is a big challenge. How do you design it so that the value is captured for everyone and not just one group?
So guys, this is really interesting. I got to start the wrap up just because we got the next panel up coming up real soon with my buddy James Haft from Powell Capital. But I want to
yes, we know James.
Yes, James is great, and I think he's getting antsy. But you know, it's not because of us, just because you know there's just some teething getting it all going. But I want to give you a moment to just hit your grace note. Just, you know, if there's one point you want to get out to the world on this topic, if you feel like it, go for it. I'm going to use the last few seconds for that.
I'll just say one thing is that we are putting out research, not like completely publicly, but we're putting out research kind of on specific companies, like a research analyst, and we're doing the actual quarterly updates. So if you want to get access to it, just go to our website, go to research. You can fill out a little form, bam, and you're on the list. And
that's fantastic.
We're gonna probably,
good.
Yeah, just do it. Yeah, because you know we can't explain all the models. It's just too much work. So I think if you start reading it, and I'll say one thing, we got on SumZero, which has 16,000 analysts on it. And we know that they're like hedge funds, $5 billion hedge fund managers levels reading some of our documents.
Beautiful.
It's pretty
Brad, last word, last thought. And I'm gonna check out your website.
I think fundamental analysis is very important, regardless of the underlying asset, whether it's a token, utility, security, you know, stocks, bonds, whatever it is. So I think if you apply traditional you know, approaches that may not be 100% effective in blockchain. Of course, you need to adapt it and modernize the things you're looking at. But I think still, personally, I like using fundamental analysis in all the investments we make.
Beautiful. All right. On that note, I want to thank you two. Really appreciate it. I'm gonna have you on my show also. This was a good part one of the Star Wars saga, I guess. And bless you. Have a good day. Brad, you're looking fit. You've just inspired me to go on a fitness track.